Have you ever wondered how much you can actually put into your tax-free savings account in 2025? The rules just got updated, and knowing your limit could save you thousands of dollars or prevent costly penalties. In this video, I'll walk you through the TFSA contribution limits for 2025, the new lifetime maximum, how unused room carries forward, and why this account is one of the most powerful tools Canadians have to grow their wealth tax-free. Let's start with the basics. A tax-free savings account, or TFSA, was introduced by the Canadian government in 2009. Despite its name, it's not just a savings account. Inside your TFSA, you can hold cash deposits, guaranteed investment certificates, GICS, mutual funds, exchange traded funds, ETFs, individual stocks. What makes it special is that your money grows completely tax free. That means interest, dividends, and capital gains inside your TFSA are yours to keep. No tax bill from the Canada Revenue Agency. And unlike an RRSP, you don't pay taxes when you withdraw either. That's why the TFSA is one of the most flexible, tax efficient accounts available to Canadians. Now, let's get into the new numbers for 2025. The annual contribution limit for 2025 is $7,000. This is the same as last year, but it adds to your cumulative total. Here's what that means. If you've been 18 or older and a Canadian resident since the TFSA began in 2009, your lifetime contribution room by January 1st, 2025 is now $102,000. That's because the total limit through 2024 was $95,000. Adding this year's $7,000 brings us to $102,000. So, if you've never contributed before, you could technically deposit the full $102,000 into your TFSA in 2025. And if you've been contributing along the way, your personal room will depend on how much you've used and any withdrawals you've made. To see how we got to that $102,000 total, let's quickly review the contribution history. In 2009, the TFSA launched with a $5,000 limit. From 2009 to 2012, the limit stayed at $5,000, then rose to $5,500. In 2015, there was a one-time jump to $10,000. The next year, it dropped back to $5,500. Since then, the limit has gradually risen with inflation, $6,000 in 2019, $6,500 in 2019-2023, and $7,000 in both 2024 and 2025. Add all those years together, and we arrive at the lifetime cumulative maximum of $102,000. But remember, this is only for someone who's been eligible since 2009. If you turned 18 later, your personal lifetime maximum will be lower. The important part is that the TFSA has consistently grown more valuable over time, giving Canadians more room to save and invest tax-free. One of the most powerful TFSA features is the carry forward rule. If you don't use up your contribution room in a given year, it isn't lost. It simply carries forward to future years. Let's say you turned 18 in 2021 but didn't open a TFSA until 2025. By then, you would have accumulated contribution room from 2021, 2022, 2023, 2024, plus 2025 itself. When you finally open your account, you can contribute all of that at once. The same principle applies to withdrawals. If you take money out, that exact amount gets added back to your contribution room, but not until the next calendar year. This flexibility means you're never penalized for waiting to start, and you can still make the most of the tax-free growth whenever you're ready. Here's one trap to avoid: over-contributing. If you deposit more than your available room, the Canada Revenue Agency charges a penalty of 1% per month on the excess amount. So even a small mistake can get expensive quickly. For example, if you accidentally contribute $2,000 over your limit and leave it there for 6 months, that's a $120 penalty. The CRA provides your official contribution room on CRA My Account, but remember, banks and brokerages may take time to update their records. That's why it's crucial to track your own deposits and withdrawals. Treat your TFSA like a checkbook and always double check before making contributions. Now, why is all this so important? Because the TFSA isn't just about saving, it's about compounding your wealth tax-free. Imagine investing $50,000 inside a non-registered account. If it grows to $100,000, you'll likely owe taxes on your capital gains. But in a TFSA, that same $50,000 doubling to $100,000 means you keep the entire $50,000 profit. No taxes, no complications. Over decades, the difference can be massive. And because withdrawals are tax-free, you can use your TFSA for almost any purpose. A down payment on a home, retirement income, emergency savings, or even short-term goals. The TFSA is essentially a Swiss Army knife for your finances, flexible, tax efficient, and designed to help Canadians at every stage of life. Let's quickly summarize. The TFSA contribution limit for 2025 is $7,000. The lifetime total is now $102,000 if you've been eligible since 2009. Any unused room carries forward indefinitely. Withdrawals add back to your contribution room, but only starting the next calendar year. Over-contributing triggers costly CRA penalties, so track your room carefully. The TFSA remains one of the best ways for Canadians to build wealth tax-free, and in 2025, you've got more room than ever to take advantage of it. So, what should you do next? First, check your exact TFSA contribution room on the CRA website. Second, decide how to use it, whether that's cash savings, index funds, or long term investments. The earlier you contribute in 2025, the more time your money has to grow tax free. If you found this video helpful, hit the like button and subscribe. We'll be covering more Canadian money tips from RSPs to RESP strategies and new tax advantaged accounts like the FHSA. Thanks for watching, and here's to making the most of your tax free savings account in 2025.